Hi students, welcome to Social Studies Digital Classes. Today we are going to learn the topic is credit in financial system. As you know, every day we are doing many transactions with money. Money we will use it as the medium of exchange. In everyday life, we buy vegetables and other goods with money. Many times you pay money for transport and buying medicines. Very often we see our parents keep money in house for day to day activity. They keep money in almaras, in kitchen, tin boxes, below pillow and under papers of cells. When we keep more money in house is not safe and it will not earn an interest. Even after 10 years also that money will not become more when there is no interest. The sum of if we keep with bank, they will pay some interest and money grows. Credit in financial system, this chapter we are going to learn. After this chapter, expected outcomes, explain the banks and types of deposits. To understand that, Reserve Bank of India act as a central bank. Identify the loan activities of the banks in their villages. Give few examples for people require loans. Analyze the importance of terms of credit and collateral. Let us watch this video. What are the transactions you are observing here? This is a bank, the transactions going on every day. Dear students, what do you above pictures explain? The above pictures explain about banking activities, money, credit and finance. Today, let us discuss about our lesson. Credit in the financial system. Source of credit, formal credit, informal credit, two types of credits. Commercial banks, cooperative banks, regional rural banks, microfinance institutions, self-help groups, these are the formal credit. Informal credit, friends, relatives, commission agents, landlords, money lenders, these are the informal credits. Bank deposits as money. Banks accept the deposits and also pay an amount as interest on the deposits. In this way, people's money is safe with the banks and also earn an interest. People have the right to withdraw the money as and when they require. Demand deposits offer another interesting facility. It is this facility which leads it the essential characteristics of money, that of a medium of exchange. Money have four characteristics. Number 1, medium of exchange. Number 2, measure of value. Number 3, standard of deferred payments. Number 4, store of value. You have read in previous class that payments being made by checks or by electronic means instead of cash. Let's watch this image. State Bank of India. This is check. Everyday transactions we are using this check. This is depositing voucher. When we are going to deposit in our banks, we can use this depositing voucher. This deposit voucher, we are going to write our account number, name, money and our signature. Token currency. We have currency, coins, paper currency, that is 1 rupee note, 5 rupee notes, 10 rupee notes, 500 rupees notes, 2000 rupee notes, 10 rupees, 20 rupees, 50 rupees, 500, 2000 rupees note. These are we are using everyday transactions. The entire system is supervised by the Reserve Bank of India, so that the promises made by the banks to honor withdrawals in cash or payment by check is always kept. The government has to ensure that people's trust in the money keep with the banks in the form of demand deposits or as fixed deposit is always maintained, and their money is available for use and accepted by all. The Reserve Bank issues guidelines for this system and examine its working so that people's trust is maintained. Dear students, why are demand deposits considered as money? What are the sources of credit for rural people? Who supervise the entire banking system? Is check considered as direct money? To discuss the above questions, loan activities of bank. Now let's watch one video so that we will understand how money flows from one person to another. In everyday transactions, we are using transport, buying goods with the help of money. The money will transactions, purchasing necessary goods, buying vegetables, depositing, banks. The Reserve Bank of India issuing the guidelines to the commercial banks. Banks keep a small portion of their deposit as a cash with themselves. In agriculture purpose, this is kept as a provision to pay the depositors who might come to withdraw money from the banks on any given day. Since on any particular day only some of its many depositors come to withdraw cash, the bank is able to manage with this cash. This is how banking started, because banks all over the world found that they could keep their promises of paying cash on demand by keeping only a small fraction of the money in cash. Loan activities in the banks. Banks use the major portion of the deposit to extend loans. There is a huge demand for loans for various economic activities. Banks make use of the deposit to meet loan requirements of the people. Here, people may deposit salary persons, harvesting, business. People, they are depositing their money in banks. People depositing money in banks, employees, they deposit their salary, agriculture farmers, their money with depositing in bank, business persons also depositing their money in banks. Their deposits, they are getting interest also. Currency, paper currency, 500 notes and 2000 notes. There is an interesting mechanism at work here. Banks keep only a small portion of their deposit as cash with themselves. For example, banks in India these days hold about 15% of their deposits as cash. This is kept as a provision to pay the depositors who might come to withdraw money from the bank on any given day. Since on any particular day, only some of its money, many depositors come to withdraw cash. The bank is able to manage this cash. This is how banking started, because banks all over the world found that they could keep their promises of paying cash on demand by keeping only a small fraction of the money in cash. Banks may make use of the depositors to meet their loan requirement. The people. Dear students, what would happen if all the depositor went to ask for their money at the same times? Talk to someone who has taken a bank loan. What was the purpose and how did they approach the bank? Then why people require credit? Let's discuss in your classrooms. Why people require credit? Education purpose. Compared to the past, people's need for credit has increased. This may be due to variety of reasons. In agriculture practices, earlier most of the inputs were supplied by the farmers themselves. They used their own cattle for flying and took help from family members for sowing seeds and manuring their farms. The new farming practices require substantial amount of cash in hand to buy seeds, fertilizers, pesticides, etc., and to pay for flying, threshing, harvesting and hired workers. These are the new form of agriculture. Buying the television, housing loan, car loan, refrigerator. When we are going to buy these, we need to have a loan. Consumer goods in the market and arrangements for finance has also increased the variety of credit arrangements. Kirana shop, every day we are buying the consumer goods. Fair price shop, BD rolling company, the company engaging workers, the company need to pay the salaries. Even vaccination also we need to take a loan from banks. Medicine. Nowadays medicine is very costly. Dear students, in the rural areas the main demand for credit is for what? Why people required credit? Terms of credit. Every loan agreement specifies an interest rate which the borrower must to pay lender along with the repayment of the principal. In addition, lenders may demand collateral, that is security against loans. If the borrower fails to repay the loan, the lender has to right to sell the assets or collateral to obtain payments. Collateral, security against loans. When we are taking loans, the commission person takes as our house or assets papers as a collateral. Property such as land, titles, deposit with banks, livestock are some common example of collateral used for borrowing. Own vehicle, livestock. When we are not able to repay the money, they can sell our properties like tractor, livestock, any proper properties. Dear students, why do lenders ask for collateral while lending? How does the demand for collateral affect poor person capacity to borrow? To discuss. Dear students, did you watch this video? I think you are enjoyed this topic. Let's discuss few questions in your classrooms. Why are demand deposits considered as money? Do you think that fixed deposit that people keep with banks would easily work like money? What would happen if all the depositors went and asked for their money at the same time? Why do lenders ask for collateral while lending? How does the demand for collateral affect a poor person's capacity to borrow? Do you think there are other reasons for people borrowing money in your area? Find out from your parents and teachers and discuss in the classrooms. These questions you can discuss with your classrooms with the help of your teacher.